Just a second. Capital. Let's hope if this can continue, if price is still holding. And this play was basically done on the bigger time frame. As I spoke to you guys and explained to you, like most of the signals I'm sending, it's based off like the H4 and the 1 hour time frame. And the reason behind this play basically was, let me fix this. The reason behind this play was based on price respecting the point 618 that we spoke about yesterday. The golden zone was based on this right here and price respecting the 8 SMA. But not to confuse you guys again, as you go along, you will actually learn how to manipulate the bigger time frame. But it makes sense. It's the same concept on the bigger time frame. We create a high, we pull back, you know, retrace 50%. If I should use my Fibonacci and draw it from here to here, this pull back will actually be in the golden zone again. Um, so it's just the same. As I can see, price pretty much top the area. So these plays that are actually sent out is based on this. All right. Because when price is trending bullish, will create high, pull back to farm support to continue to retest the high. We might not get all the way up here, for today, but later on, most definitely, maybe by Thursday, Friday, thereabout, price can actually, complete the entire move. So some of you guys caught these buys. Just remove some of these. Look a bit confusing. But it was a pretty decent play. It was a pretty good play. It was a pretty good play. I think the buys were called here. So this was pretty much the drawdown. I was pretty okay, even if this would have gotten stopped out. I was pretty okay with that because I was looking for further upside on the bigger time frame basically. So even though a price break here, you would have gotten a short-term sell which would have hit full TP here, but on the bigger time frame, price came down and rejected my area, and that's the reason why the signal was sent out. And price pulls. But what time did I send out the signal? Let me check the time. This was just check the time and see what time the signal was sent. Signal was sent 1:28. There was no drawdown here basically. There was no drawdown here basically. The signal was sent 1:28. So look on the 5-minute time frame, 1:28, 1:28. The signal was sent, I think it was within this candle right here when this candle was pushing up. So pretty much these are the drawdown you would have gotten. Very minimal. Very, very minimal drawdown right here. These are pretty normal in the Forex market. You know, we push up, we pull back to retest this based on the 5-minute time frame and price shoot all the way up. But yeah, it was a pretty good play. So what I'll be looking for if we should continue to move up and persons are still looking for trade is for us to remove this farm resistance right here. And if we farm resistance and then you get a candle breaks and close above the area, then we can continue to push up. So all you need is something to look like this. So take for example, you know, you farm your resistance. Now your resistance is right here. The only thing you would need is for the new candle to actually, you know, breaks and close above the area like this. You know, you have your top wick, your lower wick, and just wait on the next candle to wick down first, and as it push ups and say break the high, you can take your buy and anticipate pre-NY or NY volume to continue to push up to this level. Alright, so this would be the next best play right now for GBP JPY. This would be the next best play if persons are looking for buy, because I mean the idea is always the same, clean candles. So once we break the level, we should continue to move up. So the only concern would be how far will the market pull back before it actually push up. So just always give the new candle like about 5 minutes there, about 5 to 10 minutes to create its wick. And as it starts to break the high and move up, then you can actually go with it. So this is the next play I am actually visualizing for GBP JPY. Always give the new candle like about 5 minutes. For sells, we need price to break below here. For sells, we definitely need price to break below here. 153, 340, call it 340. Yeah, once you get something break below here, this would be your target right here. You know? For sells, these would be your target. For sells, we definitely need price to break below here. 153. So the only thing you have to do now, guys, is to just sit on your hands and wait. That's the only thing you can do right now, because pretty much the move was done. So the market either gonna pull back to farm support or retest the high, and again, if we break above here with the next candle, once you get a clean close, just wait on a new candle to create a lower wick, and as it starts to break the high of the previous candle here, you take your buy and anticipate the move up. So at that point, your only concern should be, will the market pull back and stop me out? But from we get a break and close above structure, it increases the probability for the market to continue to push price bullish, because you would be in the vicinity of clean candles right here. You know, so it's always the same. Just look at when price breaks structure right here. We have clean candles here to the left. We didn't have any problem pushing down. All right, so it's always the same idea, different from when I'm playing it on the bigger time frame, looking for, you know, 40 50 pips. You know, that analysis is a bit different, but you know, my regular strategy, my number one strategy, is wait for price to break out of consolidation with a close, and then I take the sell or take the buy once price creates the wick and start to break the high or break the high of the current candle. So that's how I actually play it. Thing for buy for GBP USD, we need price to close above here. And once you can get candles to close above here, then this would be the first destination, about 18 to 20 pips. Should be okay. Should be okay. For GBP AUD sells below this level. So get price to break and close below here, you can sell it down. Should be good. Break, pull, walk, and farm support. Yeah, the break and retest is a good strategy. Good strategy. It's just that, you know, it's not every time you're gonna actually get the break and retest, because sometimes when price moves, it just moves. It's always the same concept. All you have to do is to find the swing highs and the swing lows. That's all you have to do. Well, you can say we have one here, a minor pullback here, and we are continuing in the move. Yeah, and if you get a trend line, one touch, two touch, all the way out, you're gonna find that price is respecting your trend line. All right, just use the trend line for a guide of trend because it's a channel. So once price is in an uptrend, you can actually, you know, attach it and use it for a guide of trend. So when you find price starts to break it now, then you can say, okay, maybe this is an indication that we are going to create a new low that will exceed the previous low, and then pull back to form a lower high, and then at that point you can actually look for a sell for the market to continue to push price bearish. So once you can identify the patterns in the forex market, guys, you are okay. I try to use these candles to tell stories. You know, and once you spend enough time and practice and stuff like that and understand the candlestick pattern, you're not going to have any problem. I can tell you that. You're not going to have any problem whatsoever. So it takes time, so you don't need to actually rush it. You just need to be, you know, patient. Because forex really takes time. You know, you might be able to get in and grasp the concept quick, but you know, it comes with some experience and practice. That's the reason why the community I try and share as much knowledge as possible to each and every one of you guys. You know, because I think the forex, it will make a lot of changes in person's life, most definitely. You know, so we're only gonna get bigger from here going forward. Only gonna get bigger from here going forward. You know, and as you guys can see, the results that I have posted, members from the group, from 50 to 1,000 within in less than 2 weeks. That right there is actually 100 and about 45,000 Jamaican dollar right there. You know, and you can do that in 2 weeks just by using about $7,000. You know, and pretty much the person use extremely small size, keep losses small, and just capitalize on the big move. That's it with forex. I might lose 10 pips, 15 pips, but when I get a good trade like this, I'm gonna make 3 times what I would have lost. 3 times what I would have lost there. I'm gonna make that. You know, so that's the thing with trading. You try to keep losses small, and then you capitalize on the big move. And I still think we're gonna continue to push up, you know. Still think we're gonna continue to push up. Yeah. Nobody is perfect in forex, and when you're trading the forex market, if you don't over risk or over leverage, you ain't gonna have any problem. And that is from my experience. If you can work with your small account, you know, focus on consistency, trust me, you're gonna see the changes. It's pretty much a waiting game now, you know, because whenever the market gives big moves like these, it takes some time before it gather some form of volume to continue with momentum in either direction. So this might be just a rest phase. The little pullback right here might be just a little rest phase to find some form of support, and then you know we have the pre-New York and the New York session coming up shortly, and then we might continue to push with that volume. So you're not gonna get this big candle from here all the way to here. The market will need to rest or take a break at some time, pull back, continue to move up. So again, that's how the forex market move. That's the marathon the forex market do, basically. You know, take its little time, make its way up, gradually pull back, continue the journey just like that. Yes, I think. Yeah, I think if person really looking for another trade, if this farm resistance on the next one breaks and close above here, you can even watch it on the 15-minute time frame. Can even watch it on the 15-minute time frame. If the next candle breaks and close above here, Virgin, go with it. Just that manage your risk. So if you take the buy and you find that candle starts to pull back and close below, this resistance here, then at this point you want to manage your risk, close 50% and just leave the rest to run, because in entering the trade, you are accepting the fact that I am willing to lose my $10. You enter the trade, I am willing to lose my $10. But at the same time, you want to manage risk so that you can lose $5 if the trade go bad, or maybe $7, 7.5 basically. And then when you manage risk in this way, you can actually use what you would have saved back from this to put towards the next trade. And also that's the importance with risk management in the forex market. So don't just go in a trade. If you're not planning to do a day trade, don't just go in a trade and say, okay, I'm going to enter buy or sell, and I'm looking for it to push in my direction, and if not, then I'm gonna get stopped out of full. If you're not looking to do a day trade and you're looking to do a scalp, get in, manage risk. When you hit 1 to 1, take for example stop loss was here, you hit 1 to 1 here, you move stop to entry, secure some position, and leave a small percentage to run and capitalize on this move. That's how you trade the forex market. Different from if you're not doing a day trade, that's how you trade it as a scalper. You hit 1 to 1, move stop to entry, secure position, leave the rest to run, and you should be good. Yeah, man, just damn. Did I look on this too, Did I look on this right here, so? Same, it's the same thing, guys. It's the same thing. You look on your chart them, I see them here, are the same thing. Break and close below. The only problem is that this candle did not give a top wick. But I mean the euro is open and the CAD is closed, volume. So you take a sell, stop here above the previous candle and anticipate the volume to continue to push price down, because you have clean candles to the left. Came up with no problem, shouldn't have any problem going back down. And also this could just be a break, retest for the market to continue to move down. Sometimes you don't get the candle to form resistance, okay, volume and stuff like that. So in order to actually get in the trade, you consult a smaller time frame, you look on a 15-minute, you look on a 5-minute, and as you can see, the 5-minute pullback form what we call resistance. This 5-minute failed to break the high here, it breaks the low, it increases the probability for the market to continue to push price down. So that's always the idea. Always the idea. Anytime I start to do the trading like full time, then at that point we can actually stream the market on a daily basis. You know, long term, that's actually one of my goals to do live trading like Monday to Friday. That's one of my goals. But anytime I decide to go in full time and can actually, because it takes a lot of time, it's time consuming, like with the group and the premium group and stuff like that. It's really time consuming. So as soon as I'm able to set certain things right, then can actually do the live stream here on YouTube. I was looking for price to bounce from here, push all the way down here, pull back, respecting this level, look for further sells down. But the market are doing thing. Market about up a place. Yeah, pretty much you never pushed down to the level that I was looking for. So there was no sells for me basically. I never get it at the level that I wanted it at. So there was no sell. If I don't get price the way I want it, I'm not gonna take the trade. I'm not gonna take the trade. I have to get it to farm a particular way. I was looking at it. I actually somebody had messaged me and I actually sent them the buys from here. Because I was looking at it back, and the main fact that price, breaks out of the trend line, and then price starts to push back above. I attach the fib right here to the high here, and I got price here. I think the buy was executed somewhere here. But I was seeing that price break the trend line. I was looking for it to create the low. So once you push down here, this would be the confirmation that, hey, we are leaving this trend right here, and we are about to create a new trend, which would probably look something like this, to continue to bounce between, to push towards the downside. But buys and push up. It is what it is. You can do the analysis, but if the market don't gives you price the way you want it to, then just leave it alone, because it doesn't make any sense. You're gonna enter a trade and put your account at risk without any confirmation. And I think with the volatility now, we're definitely gonna reach back here. There is no doubt about it. We're definitely gonna reach back here. Might not be today, tomorrow, next week, but very soon we're gonna reach back here. Because as I stated last week, whenever I push up and create a certain high, especially at the lifetime high, you're gonna get a drop. Market gonna push back to retest it, and if we get good momentum, we're gonna break it, create a new high, pull back, test it, and possible drop. That's what I've watched over the last couple of months with the volatility 75. That's what I have seen. All right, so just keep that in mind. Even on the bigger time frame, even if you look at it on the bigger time frame, it's so big. Even on the bigger time frame, you got your highs, you got your lows, you got high, low, highs, low. This is how the market moves when the market is in a trend. And at this point, I could say, okay, we are leaving here. So more likely, once we retest our trend line, probably about here, or where we break the trend line, or about here where we will actually touch by the trend line, I can say, okay, then maybe this look like a sell. Price bounce from here. Take for example, if you're playing it on the daily time frame, or you take a sell here, with resistance here and stop here, you would have capitalized on this move down. That's how market move when we are in a trend. That's how market move when we are in a trend. You know, we create a low, push up, we break above the previous significant resistance here, we pull back, you know, we form support, push up, create a high again, pull back, farm support, and then, you know, we push all the way up. This is how the market move. Once you can look at the chart and identify these patterns, you can actually look and say, okay, price, there's a high probability price will pull back to this demand zone for it to continue to push bullish. You know, because most of the swing high and the swing low, you get like a 50 to 60% retracement, and then the market will continue to push in that direction. You know, and again, for person wondering how I trade volatility, you get a trend line from your swing high to your swing low. Bam, you get him in your golden zone right here. So you buy him, but if him start for break, if him start to break and close in this area, then you want to manage risk. If him start for break here, so then you know it's time to get out of the trade. And I use my trend line just the same as a nice guide of trend for the volatility. Person been asking over the last few months in the group, this is how I trade it. You know, to respect trend line, and whenever you find that it starts to break the trend line, then you know it's time to look for sells with a break and retest to continue down. This. This new H4 could just be creating a top wick to continue to push down. Possible. Just be creating a top wick. Because if you notice, it don't have a bottom wick as yet. You're gonna get candle with no bottom wick in a, but you know, it's always good when you see a candle open and it start to push in the opposite direction first, then you know there's a high chance that at some point it will flip to give us a lower wick. But let's see how it goes still. Same break, you know, break, create a new high, pull back, support, push again to retest it. And looking at this, we have like a minor resistance here, just at about the golden zone. You know, so we'll break out with volume, we'll create a new high, pull back, form support, based on the break of retest of structure, and continuation. Because it would also fall in that golden area just the same with a break and retest, so that's two confirmation there. But I think I would feel better if price breaks and close above here, then I can say, hey, we have these, and you take it and just manage risk. Man, those buys from yesterday for the VIX, and now may I feel it. And just be patient and wait. I think the buys were called. Where the buys were called? Somewhere here? Don't even remember. No. Buys were called. We got a breakout and price pullback. Where did the price pull back yesterday? Think it's somewhere here. Think it was somewhere here the buys were called. We are push up. Close, you know? Close. If we push up to here, we're gonna break it and we're gonna create a new high. Very close to it, you know, it didn't actually break above it, you know, it was very close, but if we push back up here, this high gonna get broken. As you can see, these are some solid candles on the H4. The market is actually holding its bullish price. You know, so let's wait and see how it goes. A minor level here as well. Alright, let's just watch GJ. So the market basically asleep. Second, one big giant candle. One big giant candle. Yeah, we are above the daily resistance, as you can see. If this daily candle close above this level, then there is nothing stopping it. Because if you notice, we create this resistance first, and this resistance is higher than here, and then we came up back to this level, just the same. You know, even though this is slightly above the area, if this daily candle can close above here, then we are now above a daily resistance, which means that the potential is there for further upside. The only problem is that we don't have any data to the left, so we don't know how far price will actually move. That's the only problem. Because it's the same thing here. You know, when we created this high with this daily candle, we rejected it. And then we push down and we retest it. And I think I sent this in another group, buys for it from here. And we push up, we create a high here. This daily candle, you know, pull back, breaks above the high, create a new high, we pull all the way back. What happened? We retest the high again, we drop, retest it a second time, and then the market goes in a descending mode where we create, you know, our lower highs or lower lows based on the daily time frame. You know, so that's so you see, once you break above here, what you think will happen? Change of trend. We're pushing back bullish. Yeah, because this would have been your channel, you know. This would have been your channel that you are trading in. Price leaves the channel and create a high. You know, we create a low. So at this point, you can get your trend line 1 touch, 2 touch. Well, maybe it would look something like this, but, you know, just let it go like this for now. You know, this would be the new channel that you are in. And as you can see, lows, highs, lows, highs, lows. What I think will happen again? We should break here and create a high somewhere about here, based on the current channel. But this is scary, very scary. You know, because if we break the level, there is no data to the left that actually predicts where price might go. There is no data to the left once we break above here. Because once we break here, then this would be the new lifetime high. So the only other option would be to target the whole numbers, the zeros and stuff like that. You know, that would be the only option. Because as you can see, the market is pretty much coming from all the way down here. All the way down here. Yeah. So there is no actual data to the left to support where price might go. That's the only problem. That's the only problem. Yeah, so we just have to give VIX some time for create some market structure, then we can try and anticipate the next move. Well, you know, the 15-minute time frame gives weak confirmation. Looking at the lows right here, we are forming higher lows. So person who loves to play around on the 15-minute time frame, if we break the high, it will increase the probability for the market to push price bullish based on what I'm looking at now. But take, for example, if you take a buy now and this current candle pulls back to break its own low, then at that point you can close 50% and keep your stop loss here based on what I'm looking at. So once price can respect the low, respect the low, the previous low right here, we should be good. But if you take the buy here and we start to break the low here, then you can close 50% and just leave the rest to run with your stop loss here and anticipate the market to push price up back to here. And you know, with the pre-NY volume, we can bust through and continue up just like that. Yeah, pretty normal stop loss 11 pip and your 12 pip. Wick fill at 20 pip plus continuation. Because we got what we call here our, you know, swing lows, which are higher than the previous. So this low is higher than this low is higher than this low. Alright, and this low is higher than this low, just the same. So what does that mean? We are going up. So once price can respect here, you shouldn't have any problem to continue the move up. But I'm done for the day. I'm not gonna be looking at any more trades. Not gonna be taking another trade. Yeah, 10.8 pips. You know, partial stop loss. So if we start to break, you know, manage risk, because this is a very tight range. But it's based on the break and retest of structure for a price to continue to push bullish. Based on that, yeah, 0.5 should be okay. Once you can respect the low, even if it pushbacks to break its own low, once you don't break the low here of the previous candle, we are still bullish. Even if this candle close bearish and fail to break this low, we are still bullish until we start to break the low here. Then at that point you want to scratch the side of your head and say, okay, maybe price might continue to pull back. Let's see how the market will actually print price. This should be, I think you can secure 10 pips at here. Should be okay here. Just make an adjustment on this based on the 15-minute time frame. Yes, because as I can see, we spoke about this candle. You know, this is a doji candle, an indecisive candle, and then this candle respect the low of the previous candle. So right here, the market is basically, I would say the market made up its mind here to continue to move up. So once you can respect the low now, we shouldn't have any problem making our way up. We just don't need the candle to actually, you know, pull back into these areas. If it does, and you take the buys, then just manage risk. You know, at this point right here, you know, 900, 150, 900, you can look to secure some position and just, you know, leave the rest to run. You move stop to entry and you should be okay. Should be good. Should be good. This will also be the close of the 30-minute candle. And again, this 30-minute candle respect the low. So even if we close here, once you don't start to break the low here, or you can manage it on the 15-minute time frame, you should be good. But you just need to get a strong bullish close. You need to get a strong bullish close. So just monitor it on the 15-minute time frame. Once you continue to respect the lows, we are still bullish. So even if price daggles in this area, you are still good. But once you start to break here, then you start to reduce your risk by closing percentage. Yeah, no, still have to pull back. So trying to farm another doji candle. If you're in it and it breaks the lower here, close 50%. The good thing with this is that it starts to pull back in the first, few seconds. So this could be a lower wick. But I don't like this. Is a weak bullish close. Very weak. I'm not really convinced. But once the low get respected, we should be okay. But if it starts to break the low, just don't get emotional about the trade and manage risk. Take percentage off. That's how I trade. Different from if I'm doing a day trade, but if I'm looking at 10 to 15 pips, that's how I manage risk. And this boy has been in a range. Yeah. Euro USD, I was looking for potential buy here, but never like the way your price did a move, so I'm gonna call it luckily. Luckily. I pull back to retest the level here. Continue up. CAD. Since the price break and potential retest to continue to push down. Got it on the 15-minute farm resistance on the 15-minute time frame. Just the same. Look at the patterns. High here. Respect the previous high. So far respect the high. Low gets broken, increase the probability. This is based on the break. Retest the here, push down to retest the low. With momentum, you continue. Create a new low. Pull back again to retest the structure that got broken. Further continuation if the market is pushing down. Got GBP, JPY. Yeah, I think at this point risk would have to be managed. Yeah, I think at this point risk would have to be managed. As the candle was bullish, and within the last 20 seconds, it just flip and close bearish. Yeah, stop loss. Once the low gets broken, it increases the probability for the market to push price down. If the low gets respected, we are still going up. It's and this is the same type of risk management that we did on Saturday. Risk management 3.0, you get the candle to push up, then it close against you. You knock off 50%, low gets broken either way. And if price starts to push back in your direction, if you don't get stopped out, then you can re-add your position for continuation. Yeah. I guess you're gonna do a deeper pullback for us to continue to move up. Guess you're gonna do a deeper pullback. Maybe to the 0.6 zone right here. Maybe to this zone. Cause it's the same thing that had happened to me here. I took buys here last night, the buys that I sent, and I got knocked. It was pretty okay, and I just wait for price to pull back to this level right here based on the bigger time frame. I took the buys here and I got stopped out. I wait for this level and it tested this level. I got in, made back what I lost times 2 plus. So it is what it is. Once we hit about 15 pip, move stop to entry and just go lie down and sleep. That's it. Because I know that once you start to break the structure, the market gonna continue to push up hard. Once you start to break above here, should continue to push up. It's very risky still, but I think at some point we're gonna create a top wick. But I think a better retest would be down to this level. God, this would make perfect sense. This would make perfect sense. Yeah, and even on the 15-minute time frame, it would be testing this 15 SMA just the same. Makes perfect sense. This candle gonna flip. This candle gonna flip. This is just a deeper pullback. This candle gonna flip. It's definitely gonna flip. Yeah, because this makes sense. This makes sense. This make perfect sense. Looking at it on the 15-minute time frame. So this right here is just a deeper pullback. So it's just a deeper pullback. If we are going up, price don't need to break and close below this level. We don't need to close below here if we are going up. 110%. So just allow it to, pull down, and then if you can get some form of support on the 15-minute or, a nice engulfing pattern, then that's decision is solely yours. But as I said, if we are continuing the bullish move up, price don't need to break and close below this level I have marked here. Da-da-da. Damn. Start to reject. Crazy. That's solid level here, based on the 30-minute resistance here. This is a nice little level right here. So sorry. Guess it a come for come get a lower we can the new candle, push up, tap into this area. Yeah, get a nice little lower wick there for continue down. Mm-hmm. Da, da, da. Oh, your USD break structure. Your USD H4. H4. H4 break and close below. Yeah. So it's GJ still. I think it's at the rejection zone. I have a nice H4 support. This is our H4 resistance. So price should respect the levels here. Should respect here. The good thing is that, we don't have a top wick as yet. We don't have a top wick as yet. On very rare occasion, probably 1 in every 10 candle you will see one without a top wick. Yeah, it's at that's the 0.618. I think here would be a more comfortable zone for potential buys. Jesus Christ, the microphone let me out. But as I was saying, guys, seeing that we close above this level and based on the fib, it lines up perfectly on the 15-minute time frame. Price top the 50 SMA and it acts as a support and resistance in the FX market. We are now at the 0.618 golden zone, which is this entire area. This entire area. So once price stays above, our SMA and don't close below, also the 4-hour resistance we have here, this red line, then I think we should be okay pushing back up. That's the reason why I actually put this on the screen. Stop would have to be below here and just anticipate the market to continue to push price bullish. I think that's a deeper pullback. This candle gonna flip, This candle gonna flip. This candle gonna flip. But again, if you close below, you just have to manage this. You're not gonna win every single trade in the Forex market. You're not going to win every single trade in the FX market. Alright? So once you can stay above here, we're good. Once you get candle start to break and close below the resistance here on the 30-minute and the H4, we shouldn't have any problem pushing back up. And this high should get broken for price to continue to move up. So I love that level here. That level here, the 6.18. This is okay. This is better. This is good. But this level here is the best to actually take buys. I know even if you are in a trade and this candle pulls back and starts to break it slow here, manage risk. You don't need to create a low, then you reject the low and then you're going to pull back to break the low again. Does that make any sense? Absolutely not. So you really want to try and keep your losses small. Really want to try and keep your losses small. And seeing that to make such a big push and create a high, it makes sense for the market to pull back, get some liquidity to continue to push bullish. It makes perfect sense on the 15-minute time frame. So even though this 50 SMA is above this level, based on the bigger time frame, we just have a solid H4 close with a solid H4 support. The 30-minute compared to the H4 is very minor. It's very minor. But let's see how it goes. If you take the buys from here, this is about 10 pips you had gotten in here. So even if price pulls back to your entry, even if you don't secure position, manage risk and close 50% in managing risk. That's 10 pips. 10 pips a day keep the stress away. Trust me. Because as I said, sometimes you're gonna enter your trades and they're just gonna continue to push. Because if person take buy here, there was no drawdown, even though there is no candles, the candle didn't finish with a wick at the top. If you take buys here, look at this. Damn, gone. Just know say the dog reject, man. Just know say the dog reject. Trust me. We are going to break the high now, but you know, as the market creates a high, it have to pull back, grab some leg to continue to push up. It's perfect sense. All right. So our person actually risk it to make the biscuit. Another entry at 606. Running 10 plus pip, 10 pip basically. I think this eye should get broken, you know. See that we came all the way down here and we rejected the area. Let's flip and continue to move bullish. One for the 606. That entry, that entry here. It hit 10 pips already. If it pulls back to stop out, it is what it is. But if it continues to push, praise be to God. There is no need. Like back in the past, in the past, when I would have, enter a trade and it goes up in profit and you move stop to entry and stuff like that and it pulls back to stop you out, well, I used to get emotional about it, but it is what it is. That will always happen in the Forex market. And the sooner you can accept that, the better it will be for you. One for the 406 and 606. Hope it can flip within the next 5 minutes. Yeah, but if it gets stopped out, it is what it is. It is what it is. Tell her 10 pips. I'm gonna always get 10 pips in the FX market. But sometimes when I try to hold it for the 30 and the 40 and the 50, it's gonna cost pain and heartache, I can tell you. I think our trade, our signal for the day, guys, that was the trade for the day basically. This was a 50 pip move. So the two minor loss would have gotten, this should have covered it if person not out there over trading and sitting and watching the chart all day and try to jump in and out of trade. Because the buy from here, trust me, was a beast move. Yeah, I got stopped out at entry. It is what it is. So this weekend, guys, again we're gonna do I'm gonna look at volatility. And I'm gonna do a in-depth analysis on the volatility index 75. You know, a lot of person trade it, and some person say easy money and easy this and easy that. If you can trade this, you shouldn't have any problem trading currency pair. So I'll post probably about Friday. Friday there about I'll post the time in the group. You know, maybe Saturday in the evening when you know like if everybody should be off from work if you're not doing an overnight job or stuff like that. So a person can actually come out to view it. But you know, for the premium members. Just knowing about just didn't like the way this was pushing up. But it makes sense for us to pull back, to grab some leg to continue to move up if that's what the market wants to do. That's what it wants to do, then it is what it is. Not gonna send out a buy on this guys because you know this move is a lot of move. You know, even though the market rob us of two good entry by not pulling in the buy zone that I sent this week, I think the buys that were caught was a pretty good move. Not gonna send out a buy on this guys. It was a pretty good move. This entire move is a lot. If person had actually caught the buy some down here and hold it, trust me, because one member actually secure. I think he secure his position somewhere here. You know, the pullback and stuff like that. But damn, if he had hold it, which I hope he did, then that would be $100+. But seeing that we came up to this level right here, and we are now pushing back, you know, we just have to wait and see. We just have to wait and see. Just remove this. We already identify the zone. We have a support here. We have a resistance here. So push up, create a high, pull back, a low, push up, another high. Are we going to pull back to form another low to continue to push again? Does this make sense to you guys? Sure does to me, but not gonna send out a signal on this. I just think that this is a lot of move, even though the market can continue to push. This entire move so far from the week start is a very big move, you know. So I'm just waiting to see what the market will do in this area. Will it respect this resistance here, which is our golden zone, based on the break and retest for continuation? I'm just waiting to see. But I'm not gonna send out a signal now for this. Alright, so no top wick pushing down. If you break the low, increase the probability for it to close in the range. Even though this close above, but market is pulling back crazy. 606. see what I have a stop again. Probably about 15 pips. Came back down to test the SMA. You know, I don't like the way our price is pushing down. Mere fact that the low pretty much got broken. Well, it tested, but it didn't fully break through. I don't like the way how the price is moving. And this rejection, this rejection right here, cow came all the way down, we pushed all the way up, we rejected the area and close here. And then this candle breaks the low of the previous candle and the second candle. What does that mean? What does that mean in the Forex market? Simply mean at this point it can continue to pull back deeper. I just want to say, based on where I had my entry, 606. You know, let's see if price will continue to push up. I beg them nothing. But better confirmation, guys, would be if you get support in this area. So if this candle gives you support, that would be better confirmation based on the break and retest for continuation. But as it relates to sell, price will have to break and close below here. But if you are a fib person, playing it off the fib, with the break and retest, price respecting this current, this previous resistance we have here, then you know that would make perfect sense. If the market actually pulls back to stop you out, then you know it is what it is. There is nothing I can do about that apart from managing risk management. Risk management. Gee, you not do nothing. Move slow. The only thing with this now, you know, the European Euro is still open and it is the pre-NY now. You know, so that the CAD will gain some strength gradually as we go into the NY open. And as I stated, as it relates to when you are choosing your currency pair, you want to select one that is open and another that is closed. GJ works well with that. The yen is currently closed, still in London, and we are now about to overlap with NY. And the yen is closed, so you know, this one is fully active, this one is inactive. So can get better trades based on that. Pull back to about here. even if you bounce from the trend line here, you would be respecting the current channel. Even if it pulls back all the way here, it would be respecting this. Well, now if you break, then I can say, okay, price might bust through this minor support and continue to push down. So at that point, you would look for a retest to sell it down. Is this the move? Could be what we are looking for still, you know. Could be what we are actually looking for. Because if a farm support above here, price don't need to break and close below here. If this can the farm support, take for example, you take a buy based on the break and retest. Why would price need to pull back into this range? For farm support above here, it makes sense for price to stay above this level and continue to push bullish. Even if it is going to range, we don't need candle to break and close in this area. And once you can identify these patterns in Forex, guys, trust me, it's like telling a story. It's gonna make a trading a lot easier. It's gonna make a trading a lot easier. But yeah. It's perfect sense. You wanna we're still open. Still open. And I think we're still gonna continue to push bullish. We just don't need price to break below here. You know, once we can stay above here, we should be okay. Should be good. $586. And for persons who are not in a buy, I think if, well, not if, when the next 30-minute candle opens and pull back to create its lower wick, you can look entry somewhere in this area. If not, you can wait for it to create the wick, and as it starts to break the high, then you can take the buy and anticipate the pre-NY volume to continue our bullish move. Because seeing that would have break above all the structures right here to the left. We break above these structures, we create a new high, we pull back into a very, very important level based on the H4, and the golden zone using the fib. The only problem I did not like is that price failed to respect the 0.5, and it came down and it rejected the 0.618 zone. Alright, and as I can see, this candle close above. Even though we came down and break the low, we are now pushing bullish. So I think if we get a strong bullish close, take for example somewhere in this area and the next candle wick down, based on what we would have discussed with dynamic risk, you can add a position here. Can add a position here to get better price, but if it starts to break the low, what will you do? Manage risk. But if it continues to push up, you can capitalize on the entire move back up. So just bear that in mind, guys. Yeah, close at negative 40. I think I'm gonna call it for the day here, so. And this. Close at negative 40. I like the pullback. I'm not gonna stay. I'm done blue for the day. I'm not gonna go back in and a draw down. Yeah. Blue for the day and blue for the week. I get the market for do what I want it for do. Manage risk. Came all the way up here. Push back to break the low. That's where I cut it. Wicks don't like, and head over to Wicks don't like, alright guys, it will start soon. I have some stuff to do. So catch you later. But you can watch his stream, he calls out trade and stuff like that. He gives good trade ideas just the same. So you can head over to Wicks don't lie and watch it. His stream will start within another 5 minutes. Gotta finish put together the course and stuff like that. And look at that. Wow.